Hello, everyone, and welcome back to my channel. Today, I want to talk about a lot of things, three stocks I'm buying, and kind of explain what's really been going on with the markets. Some stocks have been taking a massive tumble for absolutely no reason. And I want to explain why it's happening and what stocks I'm buying because thank you, Mr. Market. We really love the discounts. So, as you can see here, the Fear and Greed Index, which kind of measures the market sentiment, is all the way up to fear now. As we can see here, a week ago we were in greed. People were just buying a lot of stocks, thinking we're going to the moon, and now we're in fear. These things kind of changed kind of overnight. As you can see here, a month ago we were in fear, a week ago we were in greed, and a previous close, which is yesterday, we were in greed. So that's people are kind of all over the place. They're very emotional, and that's what the stock market is a lot of emotions in the short term. But in the long term, it's all about earnings, it's all about growth, and it's all about how much cash these companies are making. So, with that being said, the reason for the fear is we had these kind of government shutdown news, but that was kind of put to rest because they're extending. Governments go shut down every other day nowadays. I can't personally take a day off from work, but the government does it every single time. Another thing too is the Iran strikes. That's kind of a thing in the back of everybody's head. We're gonna probably attack Iran eventually, and there's a lot of oil in that area. It's gonna mess up Saudi Arabia, all that little peninsula, so it could affect a lot of the energy demand, and plus America's in war. And then lastly, the reason why I think mostly these software names are being sold off is because you have two debating sides. You have a camp that's saying AI is in a bubble. Companies like Microsoft, Google, Amazon, Meta, they're spending way too much money on AI, and AI is just a chat box that's not really going to do much. It's not going to really change the world, and it's not going to make these companies a lot of profit. And on the other camp, you have people saying that AI is so powerful that it's going to disrupt companies like ServiceNow, Salesforce, and it's probably going to just replace them. So you got two conflicting stories, and both of them are bringing the sentiment down and creating fear. But the way I see it, you're just giving me discounts on companies that are going to dominate in the future and companies that I want to hold on for many, many years. Growth compounding companies. And I'm going to share with you three stocks that I'm buying this month. The first one, I've been waiting for that company for a long time, been watching it, and now I think is in a beautiful valuation to the point where I added it to my portfolio, and that is Microsoft. Microsoft is a massive company. Almost every country on the planet uses Microsoft. Almost every business has Microsoft. Every computer, they're in gaming, they're in the second largest cloud behind Amazon, Microsoft Cloud and Azure. So Microsoft is here to stay. Microsoft is not going anywhere. People said Zoom was going to take away Microsoft. They came out with Teams. Microsoft is not going anywhere. And as you can see here, this company is forever a growth company. It is a safe company, it's a blue chip, and at these valuations, Microsoft, in my opinion, is going to $600. So you're looking around more than 40% returns on a safe company. You really don't get that anywhere else. So let's take a quick at Microsoft's financials. As you can see here, they're going on the right trajectory. They're constantly growing. That's what's the thing about Microsoft. You're going to see it going growth, not the most sexy growth, but they're growing. And if you look right here, their revenue, which is money kind of coming in, is 281 billion for the year of 2025 with net income, that means profit after they paid the light bills, paid every employee, taxes, etc., is a $101 billion company. This company has more cash than some countries, I would say. What I mean? Microsoft is not going anywhere. They recently had earnings, which were phenomenal for a company that size. Look at these numbers. You're talking about cloud revenue increasing by $51 billion, up 26%, 24 constant currency year over year. Their commercial remaining performance obligation increased by 110%, which some people are kind of a little bit iffy about that because a big portion of that is due to OpenAI. And I'll talk a little bit more about that. And as you can see here, everything else 17% increase, 29% increase. And if you look right here, Azure, which their cloud business, grew by 39%. 38% in constant currency. And then you over here, you have the market overreacting because you see this number right here, that 39%. Guess what the Wall Street wanted? The Wall Street estimates, they wanted 40%. And the reason why Microsoft did not get 40% and above is because they didn't have enough GPUs to kind of plug them in. They're kind of supply constraint themselves because NVIDIA is trying their best to pump out these GPUs. But you got companies like Meta, Google, Microsoft, all these massive companies are buying them left and right. So NVIDIA is not making enough GPUs. And that's the reason why it was only 39%. And plus, also, they said to use some of that space for their own business as well. But we're talking about the performance obligation. Most of it comes from OpenAI, their OpenAI investment. And a lot of people are kind of iffy now with OpenAI. Me too. I think OpenAI is kind of promising too much, but I think the company that will benefit the most from OpenAI is Microsoft. And that is because they invested $13 billion into OpenAI. So Microsoft kind of has a big stake in OpenAI. So if OpenAI goes parabolic, we got a 27% stake in OpenAI. And what happens if OpenAI kind of goes bust? Well, OpenAI goes to zero. I think Microsoft will be the first company to be able to buy it on pennies on a dollar. And all that technology is very valuable. I think OpenAI, which is ChatGPT, it is a valuable business, is a valuable model, and it's needed for Microsoft because you got Google with Gemini with their own model, and that is a way for Microsoft to compete with a company like Google. So as you can see here, Microsoft is entitled up to 75% of OpenAI's profits until its investment is repaid, after which it would hold 49% stake of OpenAI. So in my opinion, Microsoft at these prices, it is a good company, a company you could buy at night and sleep well. It usually doesn't drop 13% or 15% in 5 days. That never happens with Microsoft. If it goes to 370, guess what I'm doing? I am buying more. And then the next company I'm buying, I've been talking about this company so many times, and I will explain why it is so valuable. This might be the biggest company on the planet if it does what I'm going to say it does. So right now, Amazon hasn't really been the biggest growth story. It's pretty much been flat all year from February to February, and year to date has only been up 5%. But let's take a look at their income statement. As you can see here, something's not profitable. It's because they're so focused on growth. You have in 2020 a revenue of $38 billion with net income of $21 billion. You got in 2022 revenue of $513 billion and negative $2.72 billion. So they actually lost money in 2022. But if you get here in 2024, you got a revenue of $637 billion with a net income of $59.25 billion. This is the profit that they made. And this right here, this difference right here, this is the difference that has to make. Once they increase their net income, and you're looking at a revenue that no company really does before. If we look right here at Microsoft, their revenue is $281 billion. Amazon was doing that in 2020. This is Amazon's kind of reason why it's going to succeed. And the reason why it's going to succeed is because Amazon is going to be the biggest beneficiary of AI. And I'm not talking about a chat box. I'm talking about agentic AI, which is robotics. And Amazon's already been using a lot of robots, saving them billions of dollars. And if they could increase that profit margin, you're talking about so much growth to run. Right now, Microsoft is a $2.5 billion company, market cap. Imagine if they start increasing this revenue right here. This is the alpha in Amazon. Amazon doesn't have to grow anymore because it's massive. This is all that spent. Just think about it. You have delivery drivers, you got warehouse workers, you got people that are calling out sick, benefits, all that stuff, injuries, all that logistic nightmares. Imagine once you have robots, which they already do in their warehouse, kind of stock everything. Imagine once you have self-driving and all that stuff, you're going to talk about a net income that's going to start growing massively. Even if it's 10% on a 637 billion of revenue is going to increase that net income so much to the point where Amazon has the potential of being the most profitable company in the world and the biggest company in the world. And if you look at their AI, which is very kind of nice, we talked about the chat box. They also have that chat box, and that is called Rufus. And I don't know if you have been using Amazon recently. Rufus is actually very, very helpful. So you could type in what's the best running shoes, and it will kind of narrow down some options because it has so much data. It has your reviews, it has return data, it has people where people clicked on, what part of the world, and that's why they're so good with logistics. So if you look right here, Rufus is an AI assistant in the Amazon shopping app and website powered by generative and agentic AI, and is built to make shopping faster and easier by providing customer with useful information and product recommendation. And that is what Amazon is so good at. It knows how to sell that user experience. A lot of people buy from Amazon because they know if they don't like a product, they could easily return it. Not a lot of barriers. And a lot of times, if you try to return something in Amazon, they just tell you, just keep it. So they have that really good user experience, really good customer service. And now they're leveraging it with AI. So they're on the chat box and also physical AI. So Microsoft has so much room to run. You're talking about a company, 2.5 trillion, it's gonna hit 100 trillion market cap. You're talking about so much growth for a safe company that you could buy and sleep well at night. And lastly, a company that I am buying, I mentioned this before, and that is Salesforce. So we talked about the camp that said AI is so powerful that's going to get rid of companies like Salesforce. I think is the complete opposite. I think Salesforce will benefit so much from AI, especially with the agent force. I think Salesforce is a dark horse right now, and it is a sleeper. As you can see here, of October of 2025, they had a revenue of $10.26 billion with net income of $2 billion. And they're going on the right trajectory. And let's take a quicker look at their guidance on Q3 of fiscal year 2026. Revenue of $10.3 billion, which grew 9% year over year. Capital return to shareholders, so they buy back shares of $3.8 billion and 395 of which was dividends. Operating margins of 21.3%, and cash flow operating in that quarter is $2.3 billion and free cash flow of $2.2 billion. If you look here, their free cash flow grew 22%. And if you look at all these numbers, does that look like a dying business to you? And wait, once they start having AI kind of take a hold of the company and the agentic force. So right now, what Salesforce used to do is they used to sell the clients per seat. So I'm working on my company and I need to access Salesforce. I would have to buy a subscription for me to be able to access Salesforce. But right now they're changing that model and they're changing it to the usage of Salesforce and what's the performance and making a contract that way. So much growth for Salesforce, and right here they're raising fiscal year of 26 revenue guidance of $41.4.5 billion to $41.55 billion. So they're increasing. This company is not dying. This company is ready to shine. And the reason why I say that is nearly 90% of the Fortune 500 companies use Salesforce. This company is not going anywhere. And as you can see here, some of the highlights of Salesforce. Agent Force ARR surpassed $500 million, up 330% year over year. Yeah, it's a newer product. The growth is going to be a lot when it first starts off. But I think Agent Force is going to be a big, big tailwind for Salesforce. And I think AI is going to make Salesforce a lot more powerful than it is now. This business is sticky. It is not going away. These Fortune 500 companies are using Salesforce for a reason. And for you to get Salesforce out, that means you have to get every CEO, CFO, CTO to be on board to remove Salesforce. So ultimately, what I think is, I think AI is here to stay. I think AI is powerful, and a lot of people are thinking AI is just a chatbot. AI is more than that. AI is actually trying to be agentic AI. They're trying to get into robotics, and this is kind of a baby version of AI. Wait until the future. AI is going to be exciting, and it's going to make these companies a lot more powerful. And I'm not trusting an analyst that's going to tell me AI is in a bubble. I'm going to trust the best minds in the world, the CEO of Microsoft, CEO of Meta, CEO of Google, CEO of Salesforce, all these massive CEOs. They're investing so much money into AI. These analysts, they don't know how to run a business. They just got a bachelor's degree. They look at numbers, they write a few articles, and once the company starts doing well and the stock goes up, they're like, oh, upgrade the company. This company is doing amazing. Once the stock goes down, oh, sell, 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 sell. So they just follow the news. They follow what the stock price does. They don't really look at what the company is doing and what the future is doing. So, in my opinion, do your own homework, look at these guidance, watch these earnings calls, and look at the company. Stay away from the noise because these analysts, they really do not know how to run a business. These CEOs, they know how to run a business. And that's who I would trust with my money because they have been shown time and time again they're executing, and my money is better off in these companies than it is sitting in a bank. Because, well, guess what the bank is doing in the savings? They're taking your money and they're investing it into these companies. So I hope that helps. Good luck investing. When the market is down, don't look at it as I'm losing money. This is all paper losses, paper gains, all that stuff. Look at it as you having better opportunity to buy more shares.